I was feeling it, man. You delivered like that final line, like, yeah, you got it. Let's talk a little bit about the process on our sides as investors. So oftentimes people go to pitch an investor and don't understand how the investor makes money, right? Like what they have to do, like who we have to pay back, right? So you have 500 multiple funds, but you talk a little bit about why you pick the kind of companies you do and what the reason for that is.
So, like I mentioned, we're a traditional VC, but we're a combination of funds. So we have 4 global funds, and then we have 15 thematic funds that focus either on a particular sector or a geographic region. And for us, of course, as a traditional VC, we have general partners, we have limited partners that we have to, respond to and give good returns. But for us, really, the most important thing is backing founders very early on. We're usually the first institutional capital into the company. And because luckily we've been built a very strong brand and we go in so early, we focus a lot on the team and the founder because we believe in you. And that's the most important thing. You can pivot your product. You can change focus, geographic region, hire another team. But you are the biggest asset, tying into what Dan and Nan said, that we look into. That's the most important component of the company. The rest, it can change. But the identity of the founder, your vision, where you're taking the product, that's the most important thing. And we don't want to get in the way with that. We just want to give you the right resources so that you're successful, you learn, and are able to take your company to the next level.
So we're going to go down the road a little bit. So tell us a little bit about the model of Republic and how that works.
Yeah, most definitely. And I'll touch on one thing that Nan pointed out. I think as you're thinking about leveraging a platform like Republic, you really have to think about kind of like the phase that you're in. So for people who are more in like the ideation phase and literally have no means of kind of general fundraising, I think traditional crowdfunding platforms like Kickstarter, Indiegogo, GoFundMe are great places to go when you just have an idea. For us, because we have a network of angel investors, we have 300,000 registered investors on the platform who are looking for opportunities. In terms of like our background, we spun out of AngelList with the mission of bringing private market investing to the public. And so our investors are looking for opportunities that have, kind of like a chance to grow, are operating in big markets and might be able to get to that next step, but are just kind of looking generally to raise. So in terms of what we look for, we look at a bunch of different things in terms of like the market and the product, but we're also looking a lot at the team, the traction that the company already has, and then the community that's around them that they can kind of leverage to get into or to hit their general fundraising goals. So on our consumer-facing CrowdInvesting platform, that's what you see when you go to the website. We've kind of performed due diligence on those companies to kind of understand the general business model, their go-to-market strategy, and kind of like their revenue generation and growth. And then these companies are providing that information to investors and allowing you guys to make that decision as to whether or not you'd like to invest. So those are the 3 things that we kind of look at as we're performing our due diligence process and screening companies that are raising on the platform. So in terms of, if you're looking to leverage a platform like Republic or any platform generally, I would encourage you to do a lot of research into the instruments that they use, the investor base that they're kind of catering to, if they're just more of an open platform or if they're more tailored to non-accredited investors or accredited investors, and use that to help you kind of inform your decision, because that can impact the success of your raise.
So I want to hear about the model at Miami Angels, and then we're going to go to Pastor Nan to kind of close out the benediction here. He's been dropping these bombs, so you're pastor from here on out. And then we'll turn to the crowd for questions.
Sounds good. I'm glad I didn't have to follow up, Nan. So, yeah, Miami Angels was really birthed, if we're talking about the model, it was really birthed out of taking high net worth individuals here who understand the technology spaces and really helping them deploy capital. And what better way to do that than to have a group of, in our case, 150 accredited investors seeing deals in a very uniform and predictable way. As Anna said, at the end of the day, we're looking at founders first for deciding, when and how much to invest. It really comes down to that. You guys have a lot of power in dictating how a financing round transpires. I know it's hard to believe because when you're in the moment and you're having all these rejections. You certainly don't feel like that, but when you close, and when you are the single factor that is success in your business, I'm sure it's apparent then. And as far as model, more intricately than that, our group in particular, we're really what's called follow-on investors. So we're along for the ride. We're not heavy-handed in our approach as to giving advice to founders. We realize that there are other people smarter than us in the room, and to the extent that we can help, you just ask us as the investors.
Want to close this out, Sarah, before we go to Q&A?
Yeah, so I guess we were supposed to talk a little bit about choosing the right investor and finding the right terms for your round. And Dan's exactly right. You dictate how your round comes together. And the way you do that is you actually pre-screen who you want to approach. And that's a very critical part of the process that a lot of founders don't do. They think a shotgun approach is the right way to just cover as many people as possible to give you the highest chances of winning. But instead, you should focus on finding folks who have experience in the space that you're operating in and a belief or a thesis around what you're doing. Because what you'll end up finding is when you have the conversations at that level, you talk to investors who invest out of belief as opposed to out of fear. And when investors invest out of fear, they give you really shitty terms. So they give you low valuations because they want to protect their downside. They give you ratchets and anti-dilution clauses. They give you very onerous board structures and controls on financings and debt and all that kind of stuff because they don't really believe in your vision. They don't really believe in you as a founder. They see you as one of many other deals that they could potentially have downside protection on with some upside to gain. And so the work is on the founder to actually filter out all of that noise and to find the handful of people. Find 5 people that you think your mission, vision, values, progress will deeply resonate with, and research the heck out of that. Go after them with a very refined pitch, a business model, and traction. And if you can do that, you will always have strong alignment from a founder investor perspective. You will have people who give you reasonable NVCA terms, National Venture Capital Association founder-friendly terms, and you just get back to work. And I think the other thing to realize is a lot of investors do trumpet themselves as being able to unlock doors for you. And what we did early on was we used to walk into these meetings and say, we'd be so lucky to have you because you would solve all these problems for us. Almost out of deference, but I don't think VCs actually want to hear that. What they want to hear is that the founders know the problem they're solving and they can solve it themselves. And so if you can do that, have conviction on your mission and on your startup, I think that's the fastest way to a successful fundraise.
I'll just add a little founder hack. So a lot of investors tweet a lot. They write a lot of long medium posts about investing. These are all good things. You can use a free product called IBM Watson Personality Insights. You take the investor's writing, you pour it through this free AI tool. It'll tell you everything about their personality. And then you use that information to craft a perfect pitch for that personality. And I was able to use that very successfully to the tune of millions or so. I actually did it on one investor, a local investor, a really good guy. And I told him about it later, but yeah, this is not gonna happen to everybody, but we had a coffee meeting. I knew everything about him going in, to your point. He invested $2 million after that meeting, maybe a week or so later. So it really does work. IBM Watson Personality Insights. IBM Watson Personality Insights is the name of the site or app. And you just